I know you hear the word liquidity many times in the industry, and you might see different different approaches. I'll give you mine, and mine it's very simple. It's very basic, and I'm sure it's gonna click. All right, it's gonna click. Um, what do I understand by liquidity? To me, liquidity means stop losses. The stop loss cluster, let's say. That's liquidity to me, and the price will move from point A to point B, seeking for liquidity. That's a fact because the market will always try to take out those stop losses or activate those limit or stop orders. That's what the market will try to do every time, in every single movement, in every single impulse. So, in practice, how do I apply liquidity? I use support and resistance levels, and I'm gonna teach you how I use them and why I use them. I also use Fibonacci level, the Fibonacci tool, but I want you to understand that I use them not to place entries. I don't place entries based on support and resistance levels. I don't place entries because the market hit my 61.8 level, the magic number. No, I don't do it like that. I use them because I know many people use them, and they will let me see where their stop losses are located. Let me give you an example. If I place this line right here, you might agree with me that this is a resistance level. We have one test, we have the second test right there. But see what happened here. Why do you think this happened? Because people was waiting for the third test, and they placed their stop losses right above the resistance level, and then price drops. So the market, the smart money institutions, they bought right here, but they knew where the stop losses are, and the stop losses were right above this resistance level. So if you see my entries, if you see my analysis, you might find that I place support and resistance levels, but I only place them because I know below a support we have liquidity. Above a resistance we also have liquidity. That's how it works. And the market will move, as I said, from point A to point B, seeking for liquidity. Let me give you again another example. When we apply support and resistance patterns like this, what do we have here? We have support, resistance, resistance, support. So this is a sensitive level. What can we expect? If price touches this level, if price tests this level right here, people will try to buy. Traders using retail concepts will try to buy and see what happened. Boom. So that's what happened. That's what will happen every time. That's why the market moves the way it moves. So this is the most basic video I'll do for this course, because it's just very easy to identify liquidity. Also, if you use Fibonacci tools like this one, remember the textbook says that we are supposed to wait for entries right at the 61.8 level. Banks and institutions know that. They know many traders, many people will try to buy right here. They will also try to use the 75 or the 79. So you see this movement, this violent movement to the downside. Why do you think it was created? Why do you think it moved like that? It moved like that because banks and institutions knew there were people trying to buy the right at the 61.8 because they were waiting for the retracement happening right there. I hope it makes sense. I hope this makes sense. So, for instance, let's do it again. We have a resistance level right there, and we also have a support level right here. Once you start trading using this approach, you will know and you will realize that most of the time below a support there is a demand level. Like in this case we have a CP level. Above a resistance we have a supply level too. You will find this pattern many times. Again, below the support, you might find a demand level. Above a resistance, you might find a supply level. So now let's put it in practice and how we're gonna use this. Now that we know that support and resistance, let us see where the stop losses are. We can use them like as a stop loss cluster. You know that all this area above this resistance, it's completely red. I mean, full of stop losses, full of lead bid orders, full of buy stops. This is a stop loss cluster. All right. Now that you know that above a resistance level we have many stop losses, you can use them. You can use resistance levels for your take profits. For instance, if you bought here, you know the market will reach this level, will touch this zone. Why? Because above this resistance level, what do we have? We have stop losses. And this is how the market moves. It will try to jump from this stop hunt now to this stop hunt. The stop hunt will happen every time. And I'm not saying that support and resistance don't work. No, please don't get me wrong. What I'm saying is it's much easier for us to identify where the stop losses are using support and resistance levels, using Fibonacci tool, using the Fibonacci tool. That's what I'm trying to use. So basically, if I am in an uptrend, if I have an uptrend and I'm able to see this pattern just like this, I know the market will go from point A to point B. Why? Because took out liquidity here, and it will take out liquidity above this this resistance level. So that's basically liquidity to me. Also, not only support and resistance levels, but also trend lines. Trend lines is the same thing as support and resistance. We know above this trend line, below this trend line, we have liquidity. Why? People bought here. They will try to wait and buy here again, but see what happened. Boom. Price broke that trend line. We currently have a trend line here. So whenever the market shifts its direction, guess what they're gonna do? They will try to take out all the orders that have been placed in this uptrend, because we have this trend line, and below this trend line, all this area right here is full of stop losses. And that's it. Once you see my analysis, once you see the entries I share, you will find that sometimes I place a small line, small horizontal line, and that's a support and resistance. Why? Because I know I have another block right below the support, and if price breaks the support, I will have a much better entry. For instance, I'm going to conclude this session with this analysis I share. I don't remember if it was last week or this week. No, it was last week. Last week, I was trying to buy at this demand level, because we were in an uptrend and everything was doing good for a buy. I mean, the buy position was very obvious, but we also see this. When I go to the 1 hour time frame, what do we have here? What is this? Oops. What's this? A support and resistance pattern. Resistance, resistance, resistance again. What's going on with this? Okay. Resistance, resistance, resistance. Now it becomes support, support. So guess what? People will try to buy this sensitive area. See what the market did. It break the support, took out the liquidity, and then rally all the way up. You see? So that's how we use support and resistance, and that's my approach of liquidity.